Italy then, this political impasse. What effect is this going to have on the country's debt sales? And do you think it's all going to start unraveling rather quickly?
Well, it doesn't look to have had that much of a negative impact so far. I mean, you can imagine the panic we were all in about 12 to 24 months ago regarding countries like Italy and their ability to repay their debts. But when you look at Italian bond yields and in their historic context, the fact that the Europeans broadly right across Europe have said that they're willing to target yields, that they're willing to provide unlimited support, it's actually meant that the individual countries' political problems, whether it be Britain's AAA rating or whether it be Italy's elections, are not having the kind of impact we would expect on the markets. And therefore, internally, it looks like more like the kind of domestic politic issues that we would have seen pre the crisis, where actually it just wouldn't have been major news.
Do you expect Draghi to comment on it or have something to say specifically about it at his press conference on Thursday?
Well, I expect so. I mean, what you've got to remember is that politicians from outside any particular country are very loath to make comments which might affect the political process and the electoral process. And given that another election is likely in a few months at the longest, let alone a few weeks at the short end, I suspect the comments will be rather bland, just to try and soothe the markets rather than give anything which could be interpreted as the kind of electoral outcome which might be sought.
Let's turn our attention to the US then. It looks like compromise is being offered as a solution to these budget cuts, but no sign of any real progress. Markets so far seem to be much more focused on the data. So we've got non-farm payrolls on Friday, for example. But how much longer before the markets start to take notice of this?
Well, the worry is that given how much the markets have rallied in January and February, the worry would be that we now have an excuse to take some money off the table and we could get relatively easily spooked. But what's been surprising is that we haven't been so spooked. I suppose to some extent because this the politicians lack the credibility of their threats, in that they will threaten that they're going to not come to some kind of compromise, that they will take things to the wire, and of course they always do end up backing down. And I suspect that the markets anticipate exactly the same thing to happen again, and so they're not willing to miss out on any further upward moves, rather than saying to themselves, well, look, we've had some great gains, let's book some of those profits until they sort out the mess, give it a couple of weeks, and then we'll get back in. But it looks like nobody wants to pull that trigger.